Welcome back to the Daily Crypto Roundup, where we break down the latest moves in the market, the stories shaping sentiment, and the analyst takes you need to know right now. And today, it's a heavy one. Bitcoin holds its ground near 112,000. Ethereum is sitting steady above 4,300, and XRP continues to push the $3 line. But prices aren't the only thing driving headlines. We've got a massive supply chain security scare in the developer world. Nasdaq doubling down on its crypto future with tokenized trading and a $50 million bet on Gemini, and a new survey from India showing that nearly every single investor wants regulation. But most think current taxes are completely unfair. These are the themes you need to know, and they could set the tone for the week ahead. Stick with me, because today's roundup is packed. Let's start with the numbers. Bitcoin is holding firm around $112,025, showing resilience after last week's choppy trading. Analysts are calling this level a pivot. Hold it, and we might grind toward 115,000. Lose it, and we could revisit the 108,000 zone. Ethereum is trading at roughly $4,312, a modest decline from the weekend but still showing stability after a volatile summer. XRP is the big standout, trading right near $3.01, its highest level in months, fueled by renewed institutional interest and some big buys on futures desks. And outside the top three, Solana is holding around 215, Dogecoin is trading just under 24 cents, and Worldcoin is the surprise rocket, surging more than 50% on heavy institutional backing. Now, here's the thing. The numbers look stable, but the stories under the surface are anything but. Let's dig in. The first headline that caught everyone off guard today wasn't about prices. It was about code. 18 popular JavaScript packages that are downloaded billions of times a week by developers across the world, were hacked and quietly rigged to steal crypto. That's not an exaggeration. Malicious code was inserted that specifically targeted wallets, keys, and exchanges. For context, if you've ever used NPM, the Node Package Manager, you know how central these packages are to the modern internet. Billions of downloads, used in apps, websites, and even crypto projects. The idea that an attacker could slip malicious code into 18 of these and keep it hidden long enough to start stealing funds is chilling. The breach has been contained now, but the damage is real. Wallets were drained, funds were stolen, and confidence in open-source software security has been shaken again. What does this mean for crypto? Well, it's simple. Security isn't just about your exchange password anymore. It's about the code underneath the apps you trust. And as the space grows, attacks like this are going to keep happening. Analysts are already calling for deeper audits, mandatory code reviews for packages tied to financial applications, and even government oversight in some cases. It's a sobering reminder that crypto doesn't just trade in numbers, it trades in trust, and trust can be shattered quickly. From fear, let's pivot to opportunity. Nasdaq, one of the biggest stock exchanges in the world, isn't just watching crypto from the sidelines. It's jumping in head first. The exchange has filed with the SEC to allow tokenized securities on its platform. That means stocks, bonds, ETFs, and potentially other assets could be represented on blockchain rails. For years, tokenization has been a buzzword, but now it's entering regulated mainstream financial markets. And Nasdaq isn't stopping there. It's putting $50 million into Gemini's upcoming IPO, signaling not just interest, but conviction. Gemini is raising about $300 million in the offering, and Nasdaq's investment is one of the biggest institutional validations we've seen. Why does this matter? Because it shows the line between traditional markets and crypto markets is dissolving. Tokenization means faster settlement, 24/7 trading, and the potential for fractionalized access. Imagine buying tokenized shares of Apple at midnight on a Saturday. That's where this is heading. And with Nasdaq leading the charge, the days of crypto being dismissed as a sideshow are ending. Analysts say this could set the tone for other exchanges, with the London Stock Exchange and even the Tokyo Stock Exchange already experimenting with similar pilots. Now let's turn to India. A new survey shows 93% of cryptocurrency investors there want regulation. That's almost unanimous. Investors aren't asking for bans or heavy-handed oversight. They're asking for clarity, legitimacy, and protection. But here's the kicker. 84% of those same investors say current tax laws are unfair. If you followed India's stance, you know taxes on crypto can run as high as 30% on gains, plus 1% deducted at source on every transaction. For small traders, that's suffocating. The survey reveals what everyone already knew. Investors want to play by the rules, but they want rules that are fair. If India listens, it could unlock one of the biggest retail markets in the world for crypto. If it doesn't, capital flight to friendlier jurisdictions will accelerate. So what does all of this mean for the market? First, the security scare underscores a basic truth. Adoption is fragile. As more people use wallets, apps, and exchanges, the attack surface gets bigger. Incidents like today's NPM hack shake confidence and give regulators more ammunition to say, "We told you so." The flip side is that every hack usually leads to better defenses. Expect more funding for security audits, bug bounties, and compliance software. The projects that take this seriously will win trust. The ones that ignore it will die. Second, Nasdaq's move shows that institutional finance is no longer just testing crypto. It's committing capital and building bridges. Tokenized securities are going to attract a different class of investor, one that wants the benefits of blockchain without the Wild West volatility of meme coins. If Nasdaq pulls this off, expect competitors worldwide to follow. This could be the start of a slow but unstoppable integration of traditional assets into blockchain form. Third, India's survey proves that grassroots demand for crypto isn't fading, even in tough environments. When 93% of investors say they want regulation, that's not a fringe movement. That's mainstream. The message is clear. People see crypto as part of their financial future, but they need governments to stop punishing them with unfair taxes. If India softens its stance, the upside is massive. If it doesn't, watch for an underground economy to thrive anyway. Now, let's bring this back to the charts. Bitcoin is stable, yes, but it's sitting on a knife edge. Analysts are eyeing $113,400 as resistance and $110,000 as support. Break either, and we could see a quick move. Ethereum is showing weakness compared to Bitcoin, with altcoin rotation fading fast. XRP is the wild card. After breaking $3, traders are whispering about $3.50 as the next level. Worldcoin's 56% surge is eye-catching, but it also shows how speculative this space remains. One big investment headline can turn a forgotten coin into a market darling overnight. So to wrap up, today's crypto story isn't about fireworks in the charts, it's about the foundations beneath them. Security is fragile, institutions are getting bolder, and investors are demanding fairness. That combination is going to shape not just this week, but the months ahead. If you've made it this far, you know the drill. Hit like, drop a follow, and tell me in the comments what you're watching most. Is it Bitcoin's battle for $115,000? Nasdaq's tokenization bet? Or India's push-pull over regulation and taxes? This space is moving fast, and every day brings a new chapter. Stay sharp, stay focused, and as always, we will see you at the top.